G'day, welcome to the closing bell on the 30th of August for me, Friday. And look, it's just such a tough market at the moment. It really is slim pickings out there, isn't it? We've got the ASX at all-time highs. You'd think everything's hunky-dory, but you do have a look at the charts when you flick through quite a few of them, and you see it's a bloodbath out there in so many. It's such a weird market, really, at the moment. The banks and the insurers, Wesfarmers, JB Hi-Fi, a few stocks are absolutely flying. And often, what I'm starting to think is it's a reflection of passive money. We've got a lot of passive money flows now. Um, if the banks are sitting at 25% or so or more of the index, 25% of passive money needs to go into them. And then if the banks become 30% of the index as their price goes up, well, now 30% of passive money needs to go into them to create a portfolio that reflects the ASX 200, for example. So the top 50 stocks, a lot of those really flying. I think the ones that are crowded trades, they go absolutely ballistic and everyone's on them, and then they have to get on them because they're trending and the passive money flows are in there. So you have a few stocks doing that. And the rest of the market, dead, like really tough going. And that's why it's such a weird market at the moment. It's 70% of stocks below their 200-day moving average, and the ASX is at an all-time high. So, don't think that it's easy by any stretch finding individual stocks to invest in. You can go into things and they spend months and months and months going down. So many former market darlings on their knees. For example, Big Tin Can Holdings, we actually hold that in one of my services, has been hammered from nearly $1.50 down to 10 cents. And, they're a market leader in sales enablement software. They came out with a pretty good report the other day, and they bounced and starting to look good, trading around or a bit under 1 times revenue when they used to trade at 5 up to 10 times, back in their days a few years ago. So there's so many crazy things that have gone on. The speculative end blown up completely, but we're nearly at the edge of rates starting to drop. So I think if you've been in stocks and you're sitting there in pain, wondering why they're not going up, and yet the market's at an all-time high, don't worry, you're not alone. Plenty of people out there scratching their heads, wondering what the hell's going on. And me included sometimes going, well, this is just such a bifurcated market, two different things going on at once. So, doing these weekly updates, I'm having trouble finding a really good idea to send to my people. We're not trading too much at the moment due to that. So what I'm going to do for you today is take you through a gold stock, which I have actually mentioned before, but there's been a bit of news flow since, and the chart has developed a bit more. So I thought I'd show you that again. To members of my service, I don't like showing people something that we're actually in, but I have already done this in the past, so I'm not really giving away anything more, and we're already in the position. So I thought that'd be okay to have a bit of a chat about today. But before I get into that, I just wanted to say I've been talking recently about these sectors that I'm interested in getting into if we do see another shakeout coming, and shakeouts are always on the horizon. We know that markets move in that way, and after that Japan blowing up and the carry trade unwind at the start of the month, it can still be around the corner, despite the fact everything's bounced back and everyone seems to think it's all fine. A couple of weeks bad trading and everyone will be bearish again. So if you want to check that out and learn about those three ETFs and the sectors and where the actual buy zones of those sectors are, where you should start picking them up for a long-term investment in those things. These ETFs are a great way to get in, getting a fund of the world's biggest stocks in a certain sector, put them in the bottom drawer in those major themes. They can be a really great way to go just to add to your portfolio and create a lot of diversification straight away. So if you want to learn about those, yeah, please, below the video, there'll be a link there to go and check a presentation where I go into all the Japanese volatility that occurred due to the carry trades. I also show you what those ETFs and what to do. So please go and watch that video if you haven't already. If you have watched the video already, then below that you'll find you can go straight to an order form to get a special discount on joining Retirement Trader. If you're looking for long-term investments, managing risk really effectively, that sort of thing, working with me, then you can get a really big discount. And that's just till midnight tonight because we've been doing this for the last week. It actually closed yesterday, and just for people watching Closing Bell today, we've opened it just until midnight tonight. So please go and check that out. You'll see in there that there's an extra special deal if you want to join up annually as well, which I think should pique your interest if you've got any interest at all. But if not, that's fine. Let's go and have a look at this stock that I want to tell you about. So this is Regis Resources, RRL. You might know if you're a regular watcher, I sort of gave you Resolute Mining, RSG, and RRL in the one Closing Bell video a few months ago. Resolute Mining took off like a rocket. That's up 50-60% since I let you know about that, saying that I was looking for gold stocks that might catch up that had been lagging behind. So Resolute Mining was an absolute killer. But I also said Regis, and I think it was around $2 at the time, a few months ago, and that hasn't worked out so well. It's been struggling, and is sort of starting to trade back up towards the level where I said it was a buy. But I think it's interesting the developments that have happened in the stock since and the way it's trading. So I just wanted to reiterate the idea as potentially a gold stock that can play a bit of catch up, that hasn't taken off, that is a producer, is producing a lot of gold, and has taken off a big hedge book that was causing a lot of problems. This is why the stock really underperformed, was that big hedge book that cost them plenty as gold stocks were rallying. Gold price, sorry, was rallying. So that's been taken off. They're pretty unhedged. But they were working on this McPhillamys. You should have seen it in the papers that Plibersek came out and said it was a Section 10. It was culturally significant where the tailings dam was going to be. And, after years of getting all the approvals through, all of a sudden, right at the death, doing this, I think is just outrageous. But by not going through with it, by sort of really forcing their hand that McPhillamys may not go ahead, there's been a bit of relief in the gold, in the price of this stock because they're not going to need to raise lots of money. They're not going to need to spend years in construction, and then, the revenue won't come for years after that. So I think the market is thinking, well, this is really turning them into a bit of a cash cow with what they've got at the moment, and what are they going to do with that cash? And yeah, they don't have all the risk of this development. And look, even the numbers on McPhillamys didn't really inspire a lot of confidence anyway for me. What I looked at with their scoping study, etc. So it looked a bit marginal. If gold prices came off the boil in the next year or two, I think it would be even more marginal. I think it needs strong gold prices for McPhillamys to look good. So it's been interesting the way it's traded, and I just wanted to show you, big picture. What I like to look for are these, huge moves, and then the shakeout, and then huge moves, the shakeout. You're sort of waiting for those areas where you see most people probably have been shaken out, and I look for these areas, which is the buy zone, which is for me, that's 75 to 87.5% retracement of the previous wave. So that's the area where I'm starting to get interested, looking for signs of life, of something turning around. And the best way of finding things turning around is looking for these pivots, but there's more to them than meets the eye. Something I can't tell you about, but you'll learn about if you join. And so as a bit of a hint that something's coming, and then, trend shifts, etc. So that's when you're trying to get on early when things are turning around to capture the next wave higher. And it's just a similar situation with this one. Again, I've been sort of keeping an eye on it. And just really the main thing, it's been so hammered on the back of the problems they've had. You can see there that it's gone all the way down, even beyond, but still hasn't taken out the low of that wave. So it's sort of in that area where I'm getting interested, saying, is it going to turn around? And you see it's been a really long and arduous journey for it the last couple of years. It's been lots of false starts and I think a lot of shorts in the company as well. So it's in an area though where I'm interested. And what most interests me about the way it's been trading recently, I'll switch over to the weekly, is if I look at these corrections, and really it doesn't matter which wave I'm looking at, but I'm looking at a corrective wave, which is this wave here, from the massive downtrend. So there's been a massive downtrend coming into this area, and this here is the corrective wave from that. So I can make calculations off that wave. And this is a good example of what I look for and how markets sort of function and shake inexperienced traders out, is to be looking at this corrective move. And then I'm, focusing in on the midpoint of that wave, which we call the point of control, where lots of trading goes on. You can see there's lots of prices going across that area. So if we were to say, look at the volume of trading going on, this is a good way to imagine it, is, the volume of trading going on in this area is massive. The volume of trading going on up here is not much, is it? So if we were to look at that side on with a different way of looking at it, where we're looking at the price here and the volume here, that point of control, it would look something like this, wouldn't it? Sort of like a normal distribution, where you've got the point of control is where lots of trading is happening, and the edges is where there's not much trading going on. So that's where this point of control becomes like a sort of a magnet, where volume goes back to shaking people in and out of positions. So you see that point of control like a sort of a magnet that prices go around, and the buy and sell zones of the structure is where there is heightened odds that you'll see a reversal and a move back to the point of control. Oh, so that's actually before the wave got created. So there's your high there, sorry. And then you can see once it created this full correction, there's your point of control where it went back to. And then you've got multiple examples of prices going up to the sell zone, back to the point of control, down into the buy zone, back to the point of control, sell zone, point of control, sell zone, point of control, buy zone, point of control. So this is why sort of interesting what happened since the news came out, because it opened weak on the announcement that McPhillamys was probably not going to go ahead. And look, I'm sure many people thought, watch out, this thing can collapse. And instead, the buyers have come in, and it's bounced quite dramatically from that buy zone area. Now, you'll see the last time we bounced out of the buy zone, it actually went all the way through to the sell zone. So that's where I'm sort of thinking there's good odds currently that it probably will head through to that sell zone area. And we've got a weekly buy pivot sort of getting created this week as well. I sort of wanted to watch it for a while. I was very interested when the buyers came in, thinking, oh, this looks like it could reverse here. And look, it's already rallied from $1.50 up to about $1.85. It may just carry straight through, similar to this, but it hasn't actually turned into a weekly uptrend yet. So now that it's had that big run, look, there could be selling pressure here, do a bit of work, whatever it wants to do. But it's just giving good signs that it is finding the buying pressure where you'd expect it. And, it's now unhedged. And now it doesn't have the weight of big capital raisings and risk associated with developing McPhillamys on its shoulders. So it can sort of run under its own steam, I guess. So, now that it's been so weak on the back of all those worries, it may actually need to really rally to reflect the change of what's going on. So it's sort of set up quite nicely to outperform a bit now, and at least to be quite highly correlated with gold. And who knows, that could be it, and it's time for it to really run and set off the chain reaction, which is beginning the breakout above 250 especially. You're now then looking at it from that point of view of that this is now taking off, similar to if it was breaking up above those highs back then. So there's a lot of dominoes lined up on this stock if it can really get going, and there's a lot big short position has been. So there could be some short covering that goes on, and that can really drive things in the initial stages as well. So I'd be looking at this sort of from the point of view of, well, if you don't want to take on too much risk, I'm not going to tell you the exact levels I've given my members of my service so that we've got the good risk reward on the trade. If you're sort of having a crack at it around here, even something like a 50%, risk 50% of your money, which would be, down around $1. If it was to sell off down there, it's not looking good. The whole structure is just not looking good. If it turns down, heading down that way, it's like, wow, watch out. It's all breaking down below there. That's really quite ugly. So you just wouldn't want to be in it. So sort of, taking it on and you're saying, well, if it's down there, I really don't want to be in it. But what's the upside if things can go well? All of a sudden you're saying, well, the odds of it doing this are pretty high. The odds of it going down through $1 should be pretty low at this point. So it's not a bad little bet potentially. And if you can only risk $1,000, you're only buying $2,000 worth of stock. I think people sometimes trade too large. They're a bit cocky about what they know, and they put themselves in a situation where it's stressful. And scared money can't make money. So nothing wrong with buying a couple of grand worth and then looking back in a few years and it's up here and you're like, well, that was worth doing. So that's really it for today. Just reiterating on RRL, interesting move after the McPhillamys sort of rejection, and potentially it needs to really swing at least up towards that sort of, up into this area, 220, 230 to 250. I tell you, there's pretty good odds of it getting up there. You could even think about taking some money up there. Sell half and then put a stop loss at break even, sell a third, put a stop loss at break even, that sort of thing. So that's how I'm seeing it at the moment. That's really pretty much all I can find, quite frankly. It's such a terrible old market, so difficult finding really good risk reward things, which means, you sit on your hands and you wait for things to get better. You don't hit your head against a brick wall. All right, that's it. Shall chat to you next week, and please click below the video to either check out those 3 ETFs or join at a very discounted rate. All right, cheers.